All right, we are live. What's up, guys? I am nobody special. Happy Friday, you Melon Heads. It is that most unspecial time of week. It's Power Hour. It's 3:15 Eastern Time. It's been a messy week, man. What a messy week. Storms in the Northwest, flooding out railways in British Columbia. Got a couple more trillion spent in D.C., or they're trying to spend in D.C. You know, what's a few trillion among friends? You know, just sprinkle another trillion on the economy. What is the worst that could happen? We should all act surprised when the inevitable happens. Just keep sprinkling those trillions. You know, I was thinking, like, the key to a really healthy economy is to have this little candy dish right at the front desk of every office in the country. A little candy dish, and we could keep trillions in the candy dish. And every person who walks into the office, you know, while they're waiting for their appointment, if they have bad breath or something, they could just help themselves to a trillion. Just grab a trillion while you wait. And on the way out, you know, as a courtesy, we could just say, have another trillion on your way out. What's the worst that could happen? All right? It's free trillions for everybody. We'll all be trillionaires, right? My God, prosperity just raining down from heaven. Help yourselves to another trillion, folks. On me. Tell them nobody special sent you. Nobody special's trillions. They'll be everywhere. Gigi wants a trillion. Gigi, you want a trillion? You take it. That's yours. All right? Tell them nobody sent you. Good afternoon. Hello, Lynn William. How you doing? I like the LNG comments I bought in on today's dip. Congratulations, Lynn William. I think you got a better price than I got on LNG last week. So you got one up on me there. Congratulations. I congratulate you on your patience that I did not have. I bought on the news of the Russian pipeline earlier this week, or was that last Friday? I don't know. The days are just flying by. But you got a good price today, and I think that story is intact. I think that is an excellent long-term hold. So congratulations on that. And, well, let's get into it today. First off, we got a couple of things going on. So we are going to shrink my big, fat melon of a head. And I have to talk to you about this story. I like to start the live stream off with a ridiculous story every week. And boy, we got this one. Bear wanders into 7-Eleven in California, terrifying employees. And I found several things about this story shocking. Number one, I thought all the bears moved out of California for the same reason all the people moved out of California, because California is a shithole. Pardon my French. Did I say that out loud? Who would want to live in that place right now? You know, they always ask, does a bear S in the woods? I don't know, but people definitely S in the streets in California. So I thought the bears would have left California for the same reason everybody I know left California. But apparently there's still a few bears left in California. So let's go to the scene of the crime. Let's check this story out. This is great.
My goodness. He knows how to open. Hey! Stop! Hey! Shh! Shh! Hey!
This lady's like yelling at the bear.
Get out! Get
The
out!
bear's like, come on, I just want a pack of Newports. You don't have to yell, lady. God.
Get out!
But can I just have some ice cream? Please?
Hey!
Please, you don't have to get so mad.
Ow! Ow!
But, you know, I share the dismay as the store clerk, because that bear was not wearing a mask, folks. That's state law. You can't go in the store without a mask on. It's California, after all. Also, I felt like I would point out it is also against state law. No one is allowed in a public place with a bear behind. Oh, come on. I like that one. It's a tough room. All right. Read the room. I get it. So, moving on from that one. Thank you for putting up with my bad dad jokes, everybody. You guys are awesome. You may have noticed a little bit of a change to the channel lately. Here, let's get my melon out of the way so you can see my melon. I want to thank my buddy Keeks, who rolled this one out for me. I sent my buddy a message. I said, hey, man, I like this melon thing that I got going on at the YouTube channel. It seems to be going over with the crowd, and, you know, some people don't like it, and I find that hilarious. So we're going to embrace the melon fully here. I said, can you draw me a melon head? And he fired back with this guy, and I just absolutely love it. So Introducing Mel to you guys. This is our new channel mascot. We are fully going with the melon, so there you go. Enjoy it. That's for all you melon heads out there and for everybody who puts up with my totally unoriginal, repetitive, boring jokes. Thank you very much for that. And also, I got to send a shout out to my buddy Keeks. Thank you for doing this for me, for your time. And figured I would point out my buddy Keeks runs a t-shirt shop over on Redbubble where he likes to take all of his awful bad dad jokes, and they are awful, and he puts them on the t-shirts, and he draws them all himself. This is my favorite. What did the 0 say to the 8? Nice belt. Huh? No? No? Come on. I like it. I think Keeks, I think it's funny. The crowd doesn't agree. Anyways, he's on Redbubble. I'm going to put a link in the description. I meant to do that before the live stream started, but I am remiss. I have not put that link in the description yet, but I will update when this stream is over. I'll put it in there. Check out his t-shirt shop. I find his stuff pretty funny. So, Keeks, again, thank you, sir, very much for your animation and for drawing Mel for us. We shall enjoy him. And Lynn Williams says, regarding giving out trillions, please send your credit card number. Yeah, do not hold your breath, Lynn Williams. I am not giving out my credit card number. Ohio here. Hey, Kevin from Ohio. I love these messages that I get from people saying hi from Ohio, hi from Oregon, hi from, I saw there was New Zealand this week, there was Switzerland this week. There's always a couple of guys from Germany out there. I love getting these messages from all over the world. I know most of the news that I give is from the States because I live in the States. So I'm not leaving you you folks from all over the globe that are out. I hope that doesn't bug you. But I think it's awesome that the channel is being picked up all over the world like that. It's a good feeling. We all live by the golden rule. He who has the gold rules. I agree, Rick Davis. That is a good point. My mom is moving to California next week. Zeeble Fritz. Oh, no. Tell her don't do it. Don't do it. I mean, they have good weather. That's good. So, I mean, it's sunny and it doesn't rain all the time. I mean, it smells like on the sidewalk, but it's nice weather at least. I love melons, Kevin W. So do I, brother. So do I. Like it, fellow melon heads. I love all the melon head comments going on right now. Sir, do you have Twitter? Yes, I do, James Manning. My handle is JGNuke on Twitter. If you click in the, I'll show you on my screen here, right here, you'll see a little link to my Twitter handle right down and to the right of my boy Mel there. UK here. Hi from England. All right. The Brits are on. Hello England. Hello UK. We're all melon heads now. Yes, we are. All right. So moving on, I want to do a little segment today that I call Stupid Stuff People Have Said About Inflation This Week. And there have been some wonderfully stupid, arrogant, elitist, BS things said about inflation this week. And I just really got a kick out of this. Now, for the first one, I got to send a shout out to my man Mike Bender from Robin RC Models, who sent this one to me on Twitter. It's actually a retweet of a tweet from Lynn Alden. Let me get my right window open here. And I got a kick out of this one. This is from The Economist, talking about the recovery of the economy because it's recovered so well. The recovery. Let's talk about an overused word. Well, you just have to see it to believe it. So let's just play the video.
With growth has come a surprising change.
Inflation soared to its highest level in over a decade in April.
The biggest month-over-month increase in September.
A surprising change.
2008.
The sharp increase in inflation blindsided many economists.
Pause. Hard stop. Raise your hand if you were surprised by inflation this year, folks. Anyone? Anyone? Bueller? Nobody? Someone in the back? No? Nobody. Nobody. I'm in a room by myself. I look ridiculous right now, pointing to this imaginary crowd in the back. Who in their right mind was surprised by inflation? They printed trillions of dollars while shutting down all the economic output in the world. And prices went up. Amazing. Amazing. No matter how many times it's happened throughout history, every time these elitist, hypocritical a-holes pretend to be surprised. Wow. We did a thing And the same thing happened the last time we did the thing. I'm amazed by this thing. Amazing things, surprising things. Listen to these economists.
Almost no one saw it coming.
No, nobody saw it.
Inflation is the least predictable it's been for a long time, probably for decades.
Nope. Just as predictable as it's been, not for decades, you beta male, whoever you are that came out of nowhere. No, inflation is every bit as predictable as it has been for centuries, even millennia. Go back thousands of years. We can see cases of people issuing banknotes out of thin air thinking they're creating value or wealth when they're not really doing that. All they're doing is devaluing the existing banknotes, i.e. debasing the currency. It is so mathematically guaranteed and easy to predict. And yet they act surprised every time it happens. This is not an accident, folks. The only surprising thing is that they are acting surprised.
But is this high inflation just a temporary blip? Or could it spiral out of control?
Are we still asking if it's temporary? I thought we settled that. I thought we settled the temporary thing. Go ahead. Say transitory again, MFR. I double dog dare you. Anyways, this one, I could go on and on. It's nothing. It's 8 minutes of people at The Economist pretending to be surprised by inflation. Wow, I did not see that coming. We printed trillions of dollars and we got inflation. Amazing. That is some weird, wild stuff. But that's not the most ridiculous thing that was said about inflation this week. Oh, we've got Miss Sarah Jiang. Sarah Jiang, who, according to her profile, is a lawyer by training, journalist by vocation at the New York Times, Verge, and Motherboard. So this is a very educated young lady. All right, I just want to draw some attention to this. This is not, a high school dropout or, someone who's, can't read. No, this is a very supposedly well-informed, educated person who is saying all the stuff you see about inflation in the news is driven by rich people flipping their S because their parasitic assets aren't doing as well as they'd like. And they're scared that unemployment benefits plus stimmy checks plus 15 minimum wage plus labor shortage is why. JMT. I don't know what JMT means. Does that mean like just my theory or just my thoughts? I don't know. Sorry, I'm not a boomer, but I'm not a millennial either. So I don't know what all the acronyms mean. But let's just dissect everything that I'm going to call wrongest tweet ever. First of all, rich people are not flipping over inflation. They're definitely not. Rich people love inflation. Okay, inflation makes rich people richer. Inflation makes poor people poorer. So inflation benefits the wealthy big time because the wealthy tend to have large amounts of debt and large amounts of assets that generate returns. All right. And wealthy people tend to not earn wages. Wealthy people get most of their wealth through capital gains. So what do you get with inflation? Well, number one, their wages don't get devalued because most of their income doesn't come from wages. Number two, the relative value of their debts, i.e. the purchasing power of the money they owe, goes down, but the value of the assets they own goes up with inflation. So rich people get richer with inflation. Now, I don't know where this twit got the idea that rich people don't like inflation, but all the people who are pretending to be surprised by inflation and all the people who are trying to assure the poor people that they have inflation under control are the rich people who are getting richer because of inflation. I just found this tweet so backwards and so wrong. And keep in mind, they're not afraid or they're not mad that the stimmy checks and the expanded unemployment benefits and the 15 minimum wage and the labor shortages. Why? They're the ones who have created those things because they knew those things would create inflation and make them richer. Sarah Jiang, and I can't say I blame her for disabling responses to this tweet because I had a few things I'd like to respond to it. But she's sitting here acting like inflation is something that the rich hate and it makes the working class better off. Inflation is backdoor slavery, folks. Inflation is how they take you and they devalue your savings and they devalue your wages because I guarantee you most people in this country will not get a 6.25% cost of living adjustment in their salary this year. Is your boss going to give you a 6.2% raise this year? If not, you're getting a relative pay cut if your raise does not at least keep pace with CPI. And let's face it, CPI is grossly understating inflation. Actual inflation, cost of living, is probably up closer to 15% right now. So the average American is getting a massive pay cut this year, all at the expense of the wealthy's assets going up in value. So Sarah Jeong, most wrongest person everest on Twitter, congratulations for being the dumbest human being on the planet this week. But wait, we have a contender for the title, folks. We do. We have got Stephanie Ruhle over at MSNBC, who appears to be Marie Antoinette reincarnate. Let's listen to what she has to say about inflation.
No secret here, Willie. While nobody likes to pay more, on average, we have the money to do so. Household savings hit a record high over the pandemic. We didn't really have anywhere to go out and spend. And as we said a moment ago, we're expecting retail sales this holiday season to break records.
So don't worry, Melon Heads. You can afford the inflation, Stephanie Ruhle says. No problem. You can afford the higher grocery bill. Let them eat cake. And what did she say? What was the reasoning she gave? Let's just back that up a little bit.
Likes to pay more. On average, we have the money to do so. Household savings hit a record high over the pandemic.
On average, we have the money to do so because household savings hit a record high over the pandemic. Well, let's see. Is there any truth to that? What are we looking at here? Personal savings rate. And while she's right, household savings did hit a record high over the pandemic. Look, in April of 2020, 33.8% personal savings rate. But what is that personal savings rate now? Oops. Stimmies are done. We're back down to 7.5% personal savings rate. We're actually lower than we were at the start of the pandemic now. But you know what has gone up? Household debt astronomically has gone up. You know what else has gone up? The cost of living has gone up. You know what hasn't gone up? At least not very much? Our income, our wages. So what does that mean? No, Stephanie Ruhle, we cannot afford to pay more for everything. Not unless you have been using the opportunity in these higher savings to buy yourself assets that generate a return, or not unless you have taken advantage of generationally low interest rates to buy yourself assets that generate a return in excess of the interest you're paying on that debt, i.e., unless you're very wealthy. No, you cannot afford that. So, boy, there has been some really arrogant, ignorant, all kinds of nasty stupidness said about inflation this week. And, I don't know. I'm not part of a focus group. I don't get involved in a lot of polling or, political things. But I'm just going to go out on a limb here and say it's not good politics to tell people they should stop complaining about life getting harder because they can afford it. I don't think that's good messaging. I don't think that's going to resonate well with the average person. Stop your bitching. You can afford it. We gave you a stimmy check. We'll see. You know what? When it's February and people are getting $1,000 heating bills or $1,500 heating bills in February because the price of energy is so high, we'll see if people are reassured that they can afford it. We'll see if they feel like they're better off. I don't think so. I don't think that's very good messaging. I could be wrong. I'm no political expert, but I don't think that's going to go over so well. Anyways, let's check out some of these comments we've got here. The Fed can raise rates whenever they want to. There's just not enough inflation yet. They can raise rates whenever they want to. I think they're going to raise rates. I think they're going to crash the market on purpose, Nicole Post. And then once everybody starts crying for the Fed to do something, somebody please help us, when their 401ks are going down in value, the Fed is going to use that as a mandate to print and print like they have never printed before. I think that's coming. When? I could not tell you. I think it'll probably happen. We talked about this last week. I think it'll probably happen sometime between 2 and 3% on the U.S. 10-year Treasury note. I think that's when markets start freaking out. And that's when we get a correction. And I think it's going to be a lot bigger than some of the more recent sell-offs. I think we're talking like a 20 to a 50% correction, probably more likely. That's why I'm raising cash, because I want to be ready to buy assets at fire sale prices when that happens, because I think the Fed's response is going to be to turn the printer back on. And then everything we've seen with the asset bubble these last year or two is going to pale in comparison to what's going to happen after that happens. Just my thoughts here, just my theory, not financial advice. Do your own research, your own DD, arrive at decisions right for you based on your unique situation. You must remember she's from the New York Times. I know, Kevin. Don't we have to like give her a 20-second head start or something because she's from the New York Times? I think there's a rule somewhere that in any intellectual duel of wits, if somebody works for the mainstream press, you have to give them a head start. Some kind of intellectual equity kind of thing. I don't know. I could be wrong. She loves the CCP. I bet she does. Communism is where the clowns want to take us all. Wide winger, I wish you were wrong. I really do. But, I mean, look, we've got this Soleil Amarova who is not threatening. I mean, she's been nominated to take over the bank regulator position, and she's flat out said she wants the government to take over your bank account. Keep in mind, whoever has your bank account has your money, and they're in charge of who it gets lent to. So, yeah, give all that authority to the government. What's the worst thing that could happen? Don't answer that. Try 30%. Nicole, are you saying 30% the market correction? I think that's probably a solid number. I think 30% there'll be plenty of panic, if that's where you're going with that. Finally, the truth is stated. Their earnings through cap gains, no income. That's why the rich never negatively impacted by inflation. Yep. That's right, Raymond. And that's why I always say, take advantage, buy yourself an asset that generates a return. And, there's a lot of financial channels that advocate getting out of debt outright. Again, I have to reiterate, not financial advice, not a financial advisor, okay? But my personal approach, if you can borrow at an interest rate that is below the return of the asset you buy with that borrowed money, then you're coming out ahead. You're being paid to borrow that money. I see a lot of, what's the guy's channel? I can't remember the guy's name off the top of my head, but there's people who always say, get out of debt. Take advantage of this situation to get out of debt. Again, just my personal opinion and my personal situation, and I'm not the same as everybody, but this is the best time to get into debt, right? Interest rates are at historical lows. My God, they're like, you can borrow money for 2.5%, and you can buy assets that are going up at 7-8% a year. That you're coming out ahead 5% there. And I mean, look, inflation is 6.2% at least. It's probably closer to 10%. So even if you borrow that money now, the interest you're accumulating on it is lower than the rate the money is going down. So it gets easier to pay off with time. So I'm definitely not of the get out of debt crowd. Okay, I am for the responsible use of debt. Right? Don't go get into high interest toxic debt. That's not something I'll ever tell you. But if you can buy a relatively safe asset that generates a modest return, something that keeps up with inflation, and if you can borrow money at 2%, which is well below inflation, you're coming out ahead. That is how you get wealthier over time. If you take your money, if you get out of debt, right? If you pay off tomorrow's dollars with today's dollars, you're losing. And then if you put money into a savings account, inflation is eating away at your savings account. So I'm not one of those get out of debt people. That's not me. I am for the responsible use of debt. Now, I've got to put an asterisk on that because there are some people who are mentally incapable of being responsible with debt. There are some people, if you raise the limit on the credit card, within 2 days, that credit card is maxed out. And there are some people who, when that credit card is maxed out, will just go get another credit card and max that one out. All right. If you are in that category, then you probably shouldn't be watching this channel. You should probably be in therapy trying to figure out what went wrong psychologically to trigger this self-destructive behavior, because that is so self-destructive. Right. And I've never been like that. I've always been very risk averse. I've always been very conscious of debt, and I always pay attention to the interest rates. And, it's amazing. So many people I talk to, people ask me, they find out I have a YouTube channel. They'll start asking me financial questions and things like that. And I'll say, well, what stock? They'll say, what stock should I buy? Should I buy gold? Should I buy Bitcoin? And the first thing I ask them, I say, do you have credit card debt? And they almost always say yes. And I'll say, okay, what's the interest rate you're paying on that credit card debt? And they can't tell me. If you have debt and you can't tell me the interest rate you're paying on that debt, then you are mentally so in the wrong place of where you need to be in order to get your finances in order. You don't need to be thinking about investments at that point. So when I'm talking about, don't get out of debt and borrow money and buy assets, all right, I'm assuming you are not the person with that asterisk, that person with the maxed out credit cards who doesn't even know what the interest rate is on those credit cards. All right, that may not be a safe assumption. And I guess Dave Ramsey, that's the name of the channel. Dave Ramsey is always telling people to get out of debt, take advantage of inflation and get out of debt. I don't subscribe to that train of thought. But then again, I'm not the kind of guy who maxes out his credit cards. I use my credit cards for everything, and then I pay them off in full at the end of every month. That way I get the cashback bonuses, and I don't pay any interest. So the banks are paying me interest. And no, I don't go out and buy things just so I can get the 1% cash back. That's a marketing ploy. I don't fall for that garbage. So anyways, I went way off on a tangent there. I apologize, folks. Who got me started on that tangent? I don't know. Anyways, we are going to shift gears a little bit here and move on to the next story that I wanted to talk about. Goodbye, Stephanie Rule. We are going to talk about the crypto market sell-off. Bitcoin had a rough couple of days. Let's zoom in on the chart here. Ouch. Ouch, ouch, ouch. Right? That I'm not going to call that a double top, but it looks double toppy. It's certainly not a very good looking chart. All right. Now, here, oh, my melon's in the way. Let's get out of the way here. Let's put me down here. Now, let me just start by saying I am not one of those guys who is like Bitcoin is backed up by nothing. It only produces carbon emissions and e-waste, and it's a worthless asset. That's not me. If that's you, you're probably not going to enjoy this segment. All right. I am also not one of those people who will tell you gold and silver are dead and Bitcoin is going to change 4,000 years of economic history. I'm also not that. I'm somewhere in between. I think cryptocurrency is a whole new asset class that is in a class by itself. It's part hedge against inflation, part speculative bet, part store of value, but you know what? It does not accurately or completely fit into any of those definitions either. It really is an asset class all by itself. Anyways, there's a few things that are going on with Bitcoin. First of all, there's a lot of people who are saying, oh my God, Bitcoin went from, I think it peaked around 69,000 and now it's down to 57,000. Oh, it's worthless. You see, it's not a store of value. And to that, I have to say that is some very petty nonsense, because zoom out on this chart. All right, this is what, a 1 year chart here? Look at a 1 year chart. I'm not so worried about Bitcoin being at 57,000 when it started the year at 18. Look at a 2 year chart. Nope. Not really that worried. 5 year chart. Nope. Not worried. Max chart. Nope. Not worried. And you know what? 10 years from now, all of this stuff going on here on the right hand side of this chart is going to look like this stuff from a few years ago. Or it's going to look like this stuff from almost 10 years ago. It's not even going to show up. All right. So I stand by my thesis that I have stood by all along, that I think Bitcoin will be over $1 million by the end of this decade based on 2 halving cycles. One in 2024, and the next I think will happen sometime in 2028. It has to deal with the amount of Bitcoin blocks that are mined, not with the amount, not with any particular date. But there will be 2 more halvings before the end of this decade. And the last time there was a halving was in the summer of 2020. Look what happened after that. And before that, the last halving was in 2017. And look what happened after that. So we have 2 more halvings in the next 10 years, folks. Bitcoin's going up. And I don't concern myself very much with day-to-day market moves, because I'm not a market timer when it comes to crypto. I've played that game before. I sold around here right before the BitConnect crash, and I got out before Bitcoin came down all the way down here. But of course, by the time I bought back in, Bitcoin was up here higher than when I sold it in 2017. So yeah, I was right. There was a crash coming, but by the time I bought back in, the price was higher than my sell point. So if I had just done nothing, I'd be much better off today. So I have a new strategy with crypto. I buy a little bit every week, and I don't look. And I also mine a little bit of Ethereum, a little bit every day. Essentially, I buy a little bit every week through mining. And I just have that on autopilot. I don't try to time the markets, because I think you're going to have these big 10, 15, 20, even 50% price swings. But with a chart with this much upward momentum, that they don't matter. They don't matter in the long run. As hard as it is to see, thousands of dollars appear and then evaporate the next day. Zoom out on the chart, folks, and imagine what this is going to look like in 10, 20 more years. All right? And that's why I use an app called Swan. I buy a little bit every week. I put a link in the description to this video. If you want to check it out, you will get $10 in free Bitcoin if you use that link to sign up for Swan. Full disclosure, that is an affiliate link, and I will always tell you when I use affiliate links. But I use Swan personally because I like the low fees and I like the security features. I've been using it since about February without a problem. I buy a couple every week, and then I pull my coins off of Swan once I've accumulated a certain amount, and I put it into cold storage, and there it will sit for a long time. And, you know, one day I might sell them, but today is not that day. Anyways, if you're wondering what is going on, there was a couple of things that were driving this crash in Bitcoin this week. First of all, a large number of these coins from the Mt. Gox hacks were just discovered. If you don't know what Mt. Gox is, Mt. Gox was like, think of it as the Coinbase of 10 years ago, except it was run by some seriously shady dudes, one of whom went to jail for fraud. I'm not exactly sure the details of that fraud, but suffice it to say, there's some shady actors in the crypto space, and you need to be aware of that before you get involved, especially with Tether. Do not get involved in crypto if you don't understand the Tether risk. All right, let me just say that. But hundreds of thousands of these Bitcoin that were on Tether just disappeared. Well, they have turned up in the wallets of some of the people who supposedly lost them. Go figure. Anyways, a large amount of these coins are now going to be back on the market very soon. All right, and I forget the amount. I'm sorry I didn't pull this up sooner, but it is several $1 billion worth of Bitcoin is going to be hitting the market soon. And the concern is that these Bitcoin are going to be sold right away as soon as they're paid out to the people who lost the Bitcoin in the Mt. Gox hack. All right, and when I say it's going to be paid out to these people, the people who are in Mt. Gox lost a lot of Bitcoin, and they're getting like 10% of their Bitcoin back. All right, so it's not like they're being paid back in full. These people got screwed royally, and they're going to get a small fraction of their stolen Bitcoin back. Now, here's the thing. That small fraction of their stolen Bitcoin now is worth a few hundred times what they paid for it back before the Mt. Gox hack happened. So these people, even though they have still been robbed, these people are going to be rich overnight when they get some restitution from these crooks who robbed them. And the risk is that they are going to turn around and just sell right away. And that's going to be a lot of Bitcoin hitting the market, and that could lead to the price crashing. Now, that has not happened yet, but I think a lot of people may be front-running this, anticipating a price crash, and it's causing some people to sell. You also have a lot of concern around futures. There's a lot of short bets in the futures market going on with Bitcoin right now, and that may be putting some sell pressure on Bitcoin. And there's also this trial going on between these two guys in the crypto space who one of them claims he is Satoshi Nakamoto, or one of the Satoshi Nakamotos, the guys who wrote the original Bitcoin white paper. And they're fighting over a Bitcoin wallet that has a lot of Bitcoin in it. And there's some concern that if this one guy wins the case, he will be ungodly wealthy, and he may dump a large amount of Bitcoin on the open market if this guy wins the case. I don't know all the details of that one. But there's a lot playing out in the Bitcoin space, and this price action, it's people speculating on the outcome of some of these things. That's my very high level explanation of what's going on there. Anyways, you know, maybe that happens, maybe not. Again, my horizon with crypto is much longer term than that. I'm not in a 1 year or a 2 year time horizon with my crypto investments. I'm thinking more 10, 20, 30 years down the line. I'm actually thinking of my kids. If I play my cards right, my kids will inherit my Bitcoin. Anyways, that's just my thoughts. All right. Wow, we have got a lot of comments here. Shout out Ninja in the chat. Where's Ninja? Ninja's here? Bitcoin will make a run soon. What's up, Economic Ninja? Thank you, sir, for joining us in the chat. I hope it will make a run soon. I tend to agree. I think once this options expiration is behind us, I think a lot of this derivatives nonsense that's keeping the price down will make it run. And there's still a lot of people who are sticking by that $100,000 price target this calendar year. Only a month and a half left in this calendar year. So, Nicole Post says, thoughts on Brandon Admin passing another 1.5 trillion spending. I try really hard not to get political on this channel, Nicole. I try really hard. I don't always succeed in that. So I will just say I don't like the trillions. I don't like the spending, all right? Forget what they want to spend it on, unicorns and rainbows and all that other stuff, right? We've got enough trillions of dollars that we're dumping, that we've printed out of thin air. We need to stop. And no, inflation is not going to stop at 6%. I think it's going much higher. Keep in mind, inflation is now in the energy markets and it's in the food markets. All right? Inflation is not going to stop at 6%. The price of everything is going up. Oh, it's also in the labor markets, all right? Because wages have to rise. People are not working for what is being offered right now. You have 4.4 million people quit their jobs in September. 4.4 million. All right. When it comes to selling your labor, it is a seller's market. No question about it right now. And the sellers have all the control, and that means the buyers need to pay a higher price. And the buyers, they are the employers. Wages will be rising. When wages rise, prices go up. Volume is very bad at the top. Is that my fault? Sorry. Volume is very bad at the top. I didn't know if you were talking about my audio volume. I'm sorry, Allied. Seems the market cycle top is imminent for Bitcoin. It may be, Allied. Keep in mind, when I get into my Bitcoin, I hold Bitcoin with the understanding that at any given moment, it could drop 80%. All right? And you need to understand that if you're in crypto. At any given moment, you could lose 80%, folks. And I'm being frank with you here, right? If it turns out that Tether has a whole bunch of this worthless Chinese commercial paper, and that's how they're maintaining their one-for-one peg, then Tether becomes detached from the U.S. dollar, and crypto tanks, and it creates a stampede for the exit. All right, that story could break at any moment. All right, and if that happens, Bitcoin is going down, and all the altcoins are going down with it. Okay, that could happen at any moment. Now, here's the thing. Even if that happens, or even when that happens, I still stand by my $1 million price target for the end of this decade. I really do. Now, that Tether story may break or it may not break. And Bitcoin could go up another 300% before that story breaks. Or the story could break tomorrow. I don't know. I'm not going to try to time it because, again, like with the BitConnect crash, right? I sold all my Bitcoin right before the BitConnect crash, right? I got out just in time. It was a great trade. Problem is, by the time I bought back in, it was higher. So I should have just left it there. So I'm not going to try to time the Tether story. It's out there. We shouldn't pretend it's not out there because it is. I mean, if, blah, 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 blah. That's not a strategy. That's not an investment strategy. Tether could blow up the crypto market at any moment. All right. So just be aware that's out there. But I think crypto as an asset class will survive and even thrive despite that. So that's my approach there. Hi, Mr. Nobody. Hello, Mars Beetlejuice. Thank you for the link you sent me on Twitter today, by the way, sir. A lot of you guys send me stories and stuff on Twitter. I really like getting those. Thank you guys for doing that. It gives me ideas for more videos, gives me ideas for the live stream. So keep that coming. I also like that I have this little network out there. When stories break, I have people sending them to me within 5-10 minutes. It's awesome. It's an asset for the channel. So thank you, everybody who's doing that. What if a better crypto comes up? Remember Nokia phone versus iPhone. That's very possible, Secret Hero, that a better coin comes along. A lot of people might argue that a better coin already came along. Like I can hear Economic Ninja in my ear shouting digibyte, digibyte right now. I can hear it. I can't hear it, but it's there. A lot of people say Ethereum is that coin and that the flippening will happen. The flippening is when Ethereum's market cap eventually overtakes Bitcoin's market cap. That's a long way off, but it could happen. And then I have a lot of people saying that Solana is going to supplant Ethereum. And then, of course, you've got your Doge and your Shiba Inu folks. I don't get involved in the meme coins, but, there could be a better coin that comes along. There could be. Right? Just like there's always a better stock that comes along eventually. That very well may happen. I don't follow Bitcoin since I don't invest in it. I don't care. Kevin, that is your prerogative. There's no shortage of good investments out there right now, and if you're not into it, shouldn't feel pressured to get into it. Some people are not comfortable with something that is physically intangible. And, that's totally understandable. And it's one of the reasons I like physical precious metals because I hold it, I own it, and there's no doubt about it. So, I get the I get that a lot of people aren't comfortable with crypto for that reason and aren't into it and don't believe in it. So don't get into it. I mean, there's no shortage of great investments that are out there. You buy a couple of Bitcoin a week, man, you're rich. No, sir, I do not buy a couple of Bitcoin a week. I buy a small amount of Bitcoin every week, and it is not in the whole coin amounts. It'd be nice if it was, but it's not. I invest in something I only actually hold. Kevin, right on the money, man. I don't think that's a terrible strategy. Just don't forget your personal security. Don't overexpose yourself. That's the one thing I would point out. And be careful who you tell about it. Don't tell thousands of people on YouTube about it. Interesting. Might be time to buy Bitcoin when they sell, potential price drop. Waves, I agree. Bitcoin is one of the asset classes that I think when the mass deleveraging happens, and there is a lot of leverage in the crypto space, right? A lot of people are borrowing through DeFi apps right now, borrowing money to buy Bitcoin, and that's speculative bubble propping up the price of Bitcoin. So that deleveraging that's coming in every aspect of the market and every asset class will also bring crypto down with it. So I think when this big market crash that a lot of us think is coming happens, I think crypto will be one of the good assets that goes on sale along with everything else. It'll be interesting to see if crypto will handle 1970s type inflation. Will we see a year? We will see in a year. I'm watching. Tom Stencil, you could argue that we already have 1970s style inflation. I think you could make the case because of all the changes they've made to how they measure CPI over the years. I think if we were to measure the same way we measured in the 70s, we'd have the same numbers right now. And I see crypto's doing very well. So it will be interesting. I really want to know how crypto will weather the collapse of Evergrande and the Chinese economy tanking. I want to know how exposed is Tether to Chinese commercial paper. That's probably my biggest concern with crypto. Brian Velez, sir, thank you very much for supporting the channel. Could PaxG crash if the story breaks? PaxG, I have to ask, folks. I don't know what PaxG is. I'm sorry to do that to you, Brian. Is PaxG an altcoin? I am not familiar with that one. I'm going to check. It doesn't even come up. Sir, I cannot tell you if PaxG will crash if that story breaks, because I apologize. I don't know what PaxG is. And I can't comment on it then. I can tell you most assets will decline in value when the market crash happens, because when the margin calls stop, people will be forced to pay back their margin debt, and they're going to have to sell anything and everything they can to raise that cash, including physical gold and silver, including Bitcoin, possibly even real estate. They'll have to sell anything they can to raise the money that they owe. And there is so much leverage right now. Margin debt, credit card debt, real estate debt, people drawing down home equity lines of credit, student debt, corporate debt, CMBS, CLOs, right? Everything is in, everybody and everything is higher in debt than they've ever been. I mean, we are so ridiculously leveraged. It defies logic, all right? And even in stocks, right? Like look at the meme stocks. Look at AMC, look at GME, right? All these meme stocks. That's a leveraging situation because all of these funds that are so massively short those stocks, they are leveraged, right? They've taken out debt. They've borrowed shares or created shares out of thin air and sold them. That's a form of leverage. So all this big unwinding that's coming, it's because we are more addicted and we are more high on debt now than at any point we've ever been. And it keeps getting worse day after day after day. It's got to give at some point. I don't know when, but I would say soon. And with rates set to rise, I think soon is a safe bet. People are usually not looking into what happened in the past in regards to Bitcoin. It's going to go up quite a bit in December before dipping hard. That's interesting, Mike. It might go up pretty hard in December. I mean, we're about a year and a half now into this Bitcoin cycle from the last halving. So, I mean, you could argue that this bull run is getting a little long in the tooth. But at the same time, from a percentage basis, this bull run has been muted compared to previous halving cycles. So we could have a lot more room to run in a very short order. And I would also add that the Bitcoin market is still very illiquid. There's just not that many Bitcoin for sale on the market. There's not that many Bitcoins on the exchanges. Most Bitcoin has left the exchanges. It's in cold storage. It's not even an option to buy it because people just have it sitting off the market. So it doesn't take a whole lot of buys to move the market. Wasn't surprised by inflation at all. I agree. PaxG is backed by physical gold. Okay, that's interesting. Is that kind of like Kinesis, I guess? It's a crypto backed by physical? I guess I should know that, huh? Because I'm kind of a silver guy. Just want to ask, I'm an idiot. We're all idiots here, Bryant. We're all melon heads. We're all smooth brain. Don't worry about that. This is dumb money, folks. Dumb money for life and proud. Don't ever call me smart money. I don't want to be called smart money. Love the silver, says Cole Marsh. I agree, sir. I love the silver as well. It's my favorite of the shinies. I feel I have to mention I dollar cost average into gold and silver. Also, I do not just put everything into Bitcoin. I don't just put stuff into stocks. I don't just do my 401k or my pension, right? I like to hedge against my own bad decision making. I compartmentalize my money, and I have different sets of rules for how I invest it depending on where that's at. That way, I don't ever overexpose myself to any one asset class. Thank God I don't, because I was very highly levered to silver earlier in the year, and those bets ended up being very bad. Now, I still like silver right now, but I got my butt kicked in silver earlier this year after Silver Squeeze. Right? I lost a ton of money over there, but I made up for it. I made a ton of money on AMC. I made a lot of money in crypto. I made a lot of money in other stocks. So, I don't ever overexpose yourself to any one asset class, folks. I know there's a lot of people out there that are like, put all your money in GME and nothing else. Diversification is for sissies. All right? Maybe that's true. But you know what? Diversification is also for people who want to keep their wealth. Right? Because when you're diversified, you can't get wiped out by one thing. So maybe you're limiting your potential gains, but you're also protecting what you have. So be smart, folks. Not financial advice, not a financial advisor. Do your own research, your own DD. Arrive decisions right for you based on your unique situation. Hello from the People's Republic of New Zealand. Howdy, Cheeseburger. It's good to see you, sir. I love these messages from all over the world. All right. With that, I think we are going to shrink me again. Platinum 2, Cole Marsh. I agree. I like Platinum. Although Platinum is one of my bets that has not played out too well this year. It hasn't lost me money, but it hasn't made me any money. Let's see what Platinum is doing today. I know this isn't Platinum. This is the ETF. It's down a little bit today. The Platinum swings like that. Yeah, it had about the same year the other precious metals did. Anyways, I want to talk about another issue, something that has really, really bugged me this week, and that is valuations. All right, it was really a stupid week, folks. I mean, it was such a stupid week. Besides the stupid things that people said about inflation, this story just killed me. Sweetgreen shares surged 76% in Salad Chain's stock market debut. Salad Chain Sweetgreen made its debut on the public market Thursday afternoon. Shares surged as much as 91%, giving the company a market value of more than $5.5 billion. Company shares went 91% to a valuation of more than $5.5 billion. At any point, did anybody think to say, it's salad? It's salad. What is going on here? Salad is the food that the restaurant gives you for free so they can get away with charging you $50 for a small steak and you still leave feeling full because they gave you a free salad before you got your little steak. $5.5 billion for a salad restaurant. It's salad. What is going on? I mean, this Kathy Wood nonsense has really got to stop. I mean, I'm beside myself at this. It's a bunch of lettuce and tomato. Oh, it's innovative. You can order it online. Or they have disruptive robotic salad tech or something. You know, any a-hole can build a website for a few $1,000 where you can place an order for a freaking salad. Doesn't mean they get a $5 billion valuation. What is going on in this market? Do you think our dollars are becoming worthless? Because somebody just said this salad company is worth $5.5 billion. And this isn't the only ridiculous valuation story right now. Rivian, over $1 trillion market cap. All right. You know what Rivian is? Rivian is a prototype. That's what the company is. They made 156 cars this year. 156. I don't even think they sold any of them. All right. Over $1 trillion. Now, I've been telling people for years that Tesla was overvalued. And Tesla is overvalued. But you know what? I've been saying that since Tesla was $100. Tesla's like over 1,000 or what? I don't know what it is right now. But $1 trillion for Rivian for 156 cars? So we're going to value that company at almost $1 billion per car produced? Maybe these Rivian trucks or these Rivian cars, maybe they are awesome. Maybe they're fantastic. I'm sure they are. $1 trillion bucks? We've already priced this company as if every car on the road is a Rivian. It's not. What the heck is going on? 156 cars. Now, here's the thing. We used to have companies that sold things. Bear with me here. This may seem a little tinfoil hatty, but it used to be that companies make products, sell them for more than it costs them to make them, and they make what we call a profit on that sale. I know this seems like a conspiracy theory. I know this seems, maybe it's outdated or maybe it's outlandish, right? But they made things and they sold them for more than they paid to build them, and so they make money. So they turn a profit. Imagine that. No. Now we have $1 trillion car company that doesn't sell any cars, which, by the way, even if they did sell cars, nobody can get any chips. So why, even if they could make 1 million cars, they would just sit in the lot like all the F-150s are with no freaking chips in them. $1 trillion? I don't know. Maybe we give everybody a free salad with delivery of their Rivian car, and we can get a $2 trillion market cap out of it. Free salad with purchase of a non-existent vehicle. I think I'm onto something. Kathy Wood is, my phone's ringing. It's Kathy Wood. She wants to take it public. This is ridiculous. This is how you know we are in a blow off top. This is how you know markets are getting stupid. Companies that have All right. I'm back. Hello, everybody. I don't know what happened. My internet died or something. Technical difficulties. That stunk. I guess you guys can see me now. We were talking about salad. Clearly an expensive salad. Give me 1 second to get my stuff back here. That really stunk. Because I had one more thing I wanted to talk to you guys about. Something I promised somebody I would talk about. All right. We're back here. I apologize for the technical difficulties. I want to thank you guys for hanging out, for hanging with me. I don't know what that was all about. I think my internet hicked up or something. I don't know. But we're back. Salad cars killed the stream. That's right, Corzo. I don't know. Someone out there in the interwebs really didn't like my salad cars idea. Maybe somebody already had that idea and they're trying to protect their intellectual property. They're so threatened by my idea of a free salad with $1 billion car. So, NFTs can be a utility to certify things like sourcing wines or cannabis. I really don't know much about NFTs, Chedka. I guess I probably should because people are dumping a lot of money into it. I do know it's in the very early stages of that asset class, and I'm going to stay out of it for now. Have I missed the supply chain talks? Only Aman. Thank you for tuning in, and that actually is the issue that I told somebody I would talk about. So it's funny you should mention that. No, you did not miss the supply chain talks because I want to talk about that. I think we've beaten this salad issue to death. I want to talk about what happened in British Columbia earlier this week, because that is not going to be good for our inflation and our supply chain story. And this is on a website, Castanet. I'm not sure of this website. I've never been there before, but it's relatively recent. Few options at cargo port, few alternatives for cargo ships at Vancouver port, as rail links are still broken. We had some really nasty rain in British Columbia earlier this week, and I guess it hit areas that have previously been hit by wildfires. And when you get wildfires that wash away all of the foliage, or that burn away all of the foliage, and then you get heavy rain soon after that, you end up with a lot of mudslides and a lot of really damaging flooding, landslides, things like that. And it's decimated British Columbia's rail system, and it's pretty much cut off the port of Vancouver. So I want to read a little bit out of this one. For a port already dealing with congestion and traffic jams prior to this month's atmospheric river rainstorm disaster, the cutting off of all rail cargo links to Vancouver presents another major hurdle that provides few alternatives for a quick resolution. The situation is especially problematic for operators of shipping vessels handling bulk cargo, i.e. grain, coal, potash. Keep in mind those three issues. That's big: grain, coal, and potash, as these ships have little choice but to try to wait out the rail outages for their cargo to arrive at Port of Vancouver. According to the port's eHub data, there are currently 66 vessels in the port, 26 at berth and 40 at anchorage, awaiting a berth opening. Of those, there are now a whopping 20 grain carrier vessels, 4 at berths and 16 at anchorage, waiting to bring Canadian products to markets in Asia. All right, so this is not going to help our supply chain problems. First of all, this is in Vancouver, all right? So this is in Canada, southern part of Canada, but it is on the West Coast, all right? Now, U.S. West Coast ports are already in big trouble, and I think a lot of shipping from Vancouver may end up getting diverted south to some of these West Coast U.S. ports that are already ridiculously congested. So this is going to make the traffic jam worse. The other thing I want to mention is the three things that they talked about here: grain, coal, and potash, all right? Now, potash is used in fertilizer. We do not need something to make fertilizer more expensive, but there we have it. Coal, we're already having problems with the energy markets and energy shortages. And grain, I was thinking about this one, and while I don't think this will drive up food prices right away, the grain issue may actually drive down food prices a little bit, because when we had the big disruption in the ports along the Mississippi River after the hurricane over the summertime, we actually saw grain prices come down a little bit because the grain was piling up. They couldn't export it fast enough. They couldn't sell it, so the farmers were selling at whatever price they could. It was actually driving prices down. So this may actually be a little bit deflationary or disinflationary for grain prices. But overseas, it's going to drive up food prices in Asia. It's going to drive up coal prices. It's going to drive up fertilizer prices further. All right, so this is not good. All right, this is not good for the supply chain. And also, they're talking about rail that was washed out and major mudslides. These are not going to be easy fixes. All right, these rail lines are going to be down for a while. Maybe they're able to reroute it somehow. I don't work in the rail industry, so I really couldn't tell you. But everything I've read says it's going to be a long time before they can resolve this issue. So the supply chain problem just got worse. That's what you take away from this. And I was looking at marine traffic today. Here's the Port of Vancouver. And sure enough, the port runs all along here. Make sure you guys can see all right and that my melon's not in the way. Yes, you can see fine. So you can already see you got a lot of ships sitting here in the port, and you have a lot of ships at berth. And I think you're also going to see a lot of ships start to divert away. And keep in mind, this is on top of the situation going on at the other ports, like look way down south here in LA. I know there have been some news reports saying that the situation in LA was getting better. I don't know where those guys got their information, but I'm looking at the Port of Los Angeles right now, and I see a full lot here. I see full berths over here at the port itself, and I see a lot of ships sitting out here in the open water. The situation on the West Coast is not getting any better, folks. And, we'll just go in here. We'll look at Savannah, Georgia, and the same problem. Savannah doesn't look quite as bad as it's looked, so maybe we're starting to see a little bit of relief at some of the ports. But also keep in mind, we're also seeing supply chain problems moving upstream. There are problems now at Chinese export ports because of the power crisis going on in China and in Asia. It's taking longer to get ships loaded. So maybe it's not that we're unloading them all that much faster. It's that they're arriving slower because we can't even get them loaded on the other side of the ocean. And you also have things like factory output is going down in China right now because the energy crisis, they're just shutting down production of a lot of things. So the situation in the supply chain is certainly going to be further aggravated by what just happened in British Columbia. And I'm just looking at my screen right now. I don't know what happened to my lighting when the internet went out, but I'm like gold now. I apologize for the interruption of the stream, folks. I don't know what happened, but anyways, let's look at a couple of comments. I'm late. Have I missed something? Had Evergrande gone? No, Daniel, Evergrande is not at least officially defaulted yet. The guys at DMSA disagree. That will play out in court. I don't know what's going on there. I did look today. There wasn't a lot of new developments in the Evergrande story, so I didn't touch on that at all today. Thoughts on Metaverse, Russell Friedlander. I am not a big fan of that company at all or anything they do. So my thoughts on the Metaverse, I wouldn't mind if that company went away. Let's just put it that way. I don't like the way they operate. I don't like the corporate culture. And the other thing, like, does anybody call Google Alphabet? When you look at GOOG, does anybody say, oh, I wonder what Alphabet stock is doing right now? No. People still say Google. Right? So when you're a world-recognized brand and you change your name all of a sudden to something like Meta, I don't like it. I don't know. I think they kind of had to because Facebook had such negative connotations to it because of the way they do business. I think their problem is their corporate culture. I don't think their problem was their name or their brand. I think they just suck. And I think that's why they had to change their name. But if you change your name but you still suck, then your new name is going to suck. So if they want to stop, or if they want to change their approach so that they stop, I don't know, damaging young girls, or, you know, if they want to stop creating a platform or incentivizing foreign intelligence networks that want to sow chaos within our system, I don't know. Or if they stop censoring people, censorship, you know, certain topics that could get my YouTube channel banned if I even talked about them. Can't talk about that, right? So my thoughts on the Metaverse, I have no love for the Metaverse. Let's put it that way. Cole Marsh says fertilizer shortage coming. I agree, Cole. We already have a fertilizer shortage coming. It is here. Question is, how do farmers react to it? I've read conflicting accounts. Some people say that they're going to plant more soybeans instead of more corn. I've heard some people say that that's not going to happen. I have taken out a position. I bought call options, January 2023 call options in an ETF that tracks the price of corn, because either way, I think farmers are either going to use less fertilizer or farmers are going to plant more soybeans. Either way, I think there's going to be less corn grown next year. And I think that's going to drive prices up on top of the inflation story. So that's how I played that. And I see natural gas as a direct input to that. So as energy prices get worse, I see the fertilizer situation getting worse. And that doesn't bode well just for society in general, because when food prices go up, there tends to be a lot of social unrest. So keep an eye on that story. I mean, we already have a lot of things like rioting and just unpleasantness in cities around the world. And I'm afraid 2022 is going to be far worse than that. I'm in Saskatchewan, and the potash is already moving on the south rails. That's good, Cole. Thank you for that information. I like to get the information from the ground level. Always prepping, always. It's never a bad idea. Is there more stimmy checks for Christmas inflation? Could double overnight since goods are all stuck with logistical problems. I don't think there's more stimmy checks coming before Christmas. I mean, we'll get another. If you're in the U.S., you'll get the expanded child care tax credit payment again, which, you know, it's not a lot, but it's stimmy money. So air cargo went up 15% from last week to this week. A lot of stuff before Christmas. They're starting lockdowns again in Europe, by the way, Austria. I did see the Austria topic. I would love to get into that. I could talk a lot about that. You can probably guess my opinion of that, but it's just bad for business for me to talk about that, folks. I'm sorry. I'm just getting started out on this channel, and I'm not touching that one with a 10-foot pole. Although there's a lot I could say about that. There really is. The air freight going up, I guess that's companies are trying to salvage the holiday season by overpaying for air freight. We'll probably see that drop after Christmas season. Yeah, red flags is right, Cole. That's why. Wheat Brothers says Cole Marsh. Cole, that's interesting. I do think we could see more wheat planted because wheat, again, less fertilizer intensive than corn. So that's another one. Although more wheat getting planted may mean wheat prices come in a little bit if people plant less corn and more wheat. I mean, overall, keep in mind, you've got forces pushing food prices up, right? You've got inflation, you've got energy prices. That's going to push food prices up no matter what. But I think corn is going to stand out in that crowd. That's why I bought that fund. There's other ETFs out there, like I did a segment on DBA a while back. That's like a more diversified agriculture fund that's not as exposed to any one commodity. That might be a better play if you're just trying to play more of an average with the food prices and not put everything into one commodity. It's not a bad bet, but again, not financial advice, not a financial advisor. Kevin W., I've enlarged my garden for next year. That is a good idea. It's never a bad idea. Keep in mind, if you've never had a garden before, do not start a garden now thinking you're going to save money on food. All right? Because most people who go out there and they're like, I'm going to start a vegetable garden and I'm going to eat for free. Doesn't work that way, folks. Take it from a guy who once said that kind of stuff. You'll spend more money your first year building your garden and buying new tools and new equipment and seeds and plants and everything else than you ever get out of your food. And if you're a new gardener, you're going to screw something up. It's going to happen. So don't go out there and start a garden thinking you're going to eat for free. If you're not an experienced gardener, that ain't going to happen. Now, if you have other expensive hobbies and you're going to start gardening instead of doing some expensive hobby and you're going to spend less money on your garden than you would have spent on your muscle cars or whatever, that's a good financial decision, right? Because it's a net savings for you. Just don't expect to eat for free, all right? You are not going to become a farmer overnight. You're not. Farming is not easy. I don't care what Michael Bloomberg tells you. Farming is incredibly difficult. There is a ton of science that goes into it. You do not just put seeds in the ground and put water on it and then the next day you eat. Slightly more complicated than that. So if you are an experienced gardener, it's not a bad time to enlarge your garden because you probably know what you're doing. If you've never done it before, don't go sink a bunch of money into it now thinking you're going to eat for free. It just doesn't work that way. Be realistic with your expectations, folks. Only Amon says, at this point, I'm expecting food inflation to last well into 2023. Maybe an earthquake will hit West Coast. Stop short of talking about earthquakes, but yes, I do think food inflation will continue well into 2023. I think it's going to hit a fever pitch next year. It's, all these people who are saying things like you can afford to pay more at the grocery store or inflation is a rich person's problem. Stop. These people are going to really regret that. That is some serious Marie Antoinette, let him eat cake BS right there. And the internet does not forget. You do not want to go on record as being one of these people who says inflation is a BS problem because that's not going to age well. Inflation hurts the poor, disproportionately hurts the poor and the working class. I mean, not even close. It helps the rich and it really hurts the poor. And inflation is the kind of stuff that brings out the guillotines, folks. You need to... The people that are making these kinds of statements like it's a world first class problem or whatever, careful. Be careful with that kind of garbage. I'm telling you, that is not smart because when people get hungry, they get irrational and they get angry, and you don't want to be the person telling them it's your fault you're angry and irrational. That's not going to go over well. I ordered a new iPad directly from Apple. It was made in China, then shipped to Hong Kong. It's been stuck there. It's interesting, Lynn. Yeah, I have heard that the situations in the supply chain, it's not just about getting it off the boat anymore. It's also about getting it onto the boat. And, a couple months ago, China shut down the port in, was it Ningbo is the name of the city? Over one COVID case. They shut down the whole port. I think that was probably China messing with the U.S. more so than them worried about their one COVID case. But greetings from the Netherlands. Hello, the Relax Experience from the Netherlands. I'm going to buy a glass garden house and a wood oven. Interesting. Again, if you have never been a gardener before, don't expect to become a farmer overnight. It's not easy. It's hard work. Get a couple of chickens. Easy, small start. I was this close to buying chickens last year. This close I didn't do it. I really wanted to. And you're right, chickens are not a ton of work, but starting the coop and everything else and buying, the heat lamp if you live in a cold area and everything, you're looking at a couple of grand in startup cost. Keep in mind, a dozen eggs right now is about $1.40 or $1.50, $3 if you buy the brown ones or the organic ones. So your break-even point is going to be pretty long, even with inflation. Now, if you can build a chicken coop out of scrap lumber that you have sitting around, and there's ways you can cheapen it. But if you're just going to go to Tractor Supply and buy a brand new plastic chicken coop in a kit and assemble it and buy all the starting stuff, you're going to be a couple grand out of pocket before you get your first egg. It's just something to think about. Again, it's not easy. If this stuff was easy, everybody would do it. It's not. And then you have to take care of them too. And do you want to go out there when there's 2 feet of snow to feed the chickens and clean the coop? It's hard work. It's not just free money, folks. I farm blueberries. I eat hundreds of pounds a year. Lynn, I do not farm blueberries, and I eat hundreds of pounds a year because my wife loves blueberries. She buys a lot of blueberries. I hear farming blueberries is very difficult, though. What is it? You need a really high pH in the soil to get blueberries. Like, if you're going to farm blueberries, it's the only thing you're going to be able to grow because you have to mess with the soil so much, and then nothing else will grow there. Maybe strawberries. I don't know. But I hear farming blueberries is not that easy, that you really got to watch your soil chemistry very close. I stick to my tomatoes and my basil and my mint. I put mint in my bucket tonics. I grow my own mint. I like it. My wife brothers have a farm, the Relax Experience. That's awesome. It's good to know a farmer. I know a farm that randomly started producing potatoes. They had been impossible to grow at altitude, but one year they started coming up randomly. Global warming. Interesting, random potato farmer. Did they end up with, what was it, Fungal Doug? The giant, what was it, like a 35-pound potato that grew in New Zealand? Chickens do have great fertilizer. I just buy it from a guy that sells their eggs. That's right. Chicken poop is supposedly like the best fertilizer, the highest nitrogen content that you can get. So, chickens fit nicely if you can get that symbiosis going between the chickens and the garden and everything else, and you can do it right. I can see if you do it right and if you plan it out well, you can save yourself a lot of money on your farm bill. You can add to your food security. You can hedge against inflation. But if you just haphazardly approach the subject, you're going to end up pouring thousands of dollars into something that saves you a couple of bucks a year. So take your time, do it right. People think there's going to be a blackout, the Relax Experience. There could be a blackout. If we get a really, really cold winter, most people, I'm speaking in the U.S. right now. I can't speak for the European power grid, but in the U.S. right now, most people have no idea how close the power grid has come to failing during some of these polar vortexes over the last couple of years. And we really haven't had a bitter cold winter for about 10 years in the U.S. And like we saw in Texas last year, the parts of the U.S. power grid are not as resilient as they used to be, and they cannot handle unseasonable cold. If we were to get a major chunk of that polar vortex to break off like we got in years past, and it were to hit like, the U.S. Midwest or the Northeast, where a lot of our grid has gone from coal and nuclear to natural gas over the last few years, I'm not sure the grid is going to stand up to that. I'm really not. So when that happens, if it's really cold and the power goes out, furnaces stop working, traffic lights stop working, it's not good, folks. So if you've got a wood-burning stove in your house, good for you. Same goes for a huge chunk of the Canadian dairy industry. Build mine of scrap, chickens, eat anything. 5 chicken, 20 plus eggs, great fertilizer for veggies. Big Bush, you got a pretty nice setup, it sounds like. Congratulations. True, I add coffee ground and anything else I can. Kevin, I've also heard coffee grounds makes an excellent fertilizer, very high in nitrogen content. This turned from a finance thing into a gardening channel all of a sudden. I didn't mean to get all agrarian on you guys. Anyways, oh my goodness, it is 4:31. I just realized what time it was. We've been going for an hour and 16 minutes now. I think this is probably a good time to call this one, folks. Guys, I want to thank you for your time. Thank you for checking it out, for spending your Friday with me. Thank you for your comments, for your questions. Thank you, everybody who has been sending me links on Twitter and on email. I love the feedback, and I love all the news tips that I'm getting. It's really helping the channel out. So please keep that stuff coming. Once again, thank you to Keeks for creating the Melon Head image for me and for doing that. Don't forget to check out his t-shirt shop if you like bad dad jokes. He is the man when it comes to that. I will go back and put a link in the description to this video. All right, folks, I want you guys to have a great weekend, and we will be back. And until next time, live small and dream big.